and most of us have no idea it's happening. That's why it's known as the hidden tax, a silent tax. Everybody pays the price, and if you don't know you're paying the price, you're the one that's probably paying the biggest price.
Right.
So this is where it's so important to get educated on that.
So what would be the thing if there was the biggest opportunity to create wealth right now?
Yeah.
What industry or sector would that be? Is that in this, stocks? I feel like nothing is stable. Like if you're gonna put money in something, you could make a lot or you could lose it all within a month. Is it the stocks? Is it the crypto, NFT space? Is it the housing? Is it investing in yourself in another way? What would you say we should be investing in?
Absolutely. So the answer is going to be looking for where the opportunity happens.
Okay.
So 2008 was real estate. That was the biggest real estate opportunity in our lifetimes. In 2020, it was stocks and crypto. In 2020, the stock market from its bottom to the end of 2020 grew by 60%. The crypto market grew by almost 600%. And so it's
fine. If you didn't get out, you've kind of gone back to...
Of course. But this is where, again, the psychology of your investing is so important. But the thing that you want to pay attention to now is it's you want to see where things are going.
Yes.
That way you can make the right moves. Remember, history doesn't repeat itself, but it rhymes. Your question, where do you go? Where do you put your money? And the reason why it depends on the Fed is because it depends on what the Fed does next. If they continue fighting inflation and they say, we're going to do whatever it takes to bring inflation down, that means we're going to pull money out of the economy, we're going to jack up interest rates, even if that means that we're going to go into a recession, even if that means we cause a housing market crash, even if that means we cause a stock market crash, we're going to keep doing it. If they do that, well, then you're going to have a big buying opportunity in pretty much any asset class, assuming you find a good investment there, a strong fundamental investment. But there's also the chance that the Fed doesn't do that. There's a chance that the Fed says, we're starting to raise interest rates now, and this is what they're doing right now. And then 6 months go by and they say, these higher interest rates are really hurting the economy now. The economy isn't as strong as we thought.
So
the economy
back down a little bit,
and then they start cutting interest rates. Now what are you doing? You're in a high inflationary environment.
Oh, man.
And now you're creating more inflation in order to fight the economy. Because the Fed can either fight inflation or they can fight the economy. They can only do one or the other. And in all the previous crashes that I talked about, we were never worried about inflation. We were worried about an economic slowdown in 2008. We were worried about an economic slowdown, 2001, economic slowdown. Even in 2020, the worry was not inflation. The worry was deflation.
Right.
The Fed says we can't have deflation. We don't want people to have their savings worth more. We need to create more inflation. And now we have an inflation problem. And so if the economy goes down, what do? You create more inflation to save the economy. However, that creates more inflation. Our economic slowdown today is being caused by inflation. You cannot fix an inflationary recession through more inflation. What's that going to do? It's going to make the inflation problem worse. Yeah, it'll probably boost the economy in the short term, but it will crash the stock market and the real estate market, not downwards, but upwards.
Interesting.
And that's a very interesting concept to think about, because when you think about a market crash, what are you thinking? Stock prices go down, real estate prices go down. But if you're worried about high inflation, and then you start creating more inflation, what's going to happen? People are going to take the dollars and they're going to want to get out of cash, because they're going to say, if our inflation rate goes even higher, our cash is going to lose value even quicker. We want to own any asset, stocks, want to own real estate, maybe cryptocurrencies, some smart ones. You're going to see more cryptocurrencies potentially go under. We've already seen some go under. So you're going to want to make fundamental investments, but you could see just a lot of money flow into these assets, kind of like what we saw happen in 2020. We were in a recession, but the stock market was going upwards.
Right.
Why? The money printer let it all in. So that's where you want to pay attention to what's happening there.
If the Fed keeps fighting inflation, you will have a big opportunity in assets. That's when assets would crash and stuff like that. They would have to have pretty good fundamentals. Two, something else the Fed that may do is try to save the economy. And we haven't actually seen this yet with inflation so high. The only way the Fed can save the economy is by inflating even more. What I mean there, printing more money. printing more money, which would increase inflation. Also, it would increase asset prices as well. Assets prices would rise, inflation would rise, and what the content creator of Minority Mindset is saying, we have never seen that. We would fail upwards. So the Fed has two choices. All we could do is wait. Wait to hear what he's going to say. So I'm probably going to close this up. This is the state of DeFi. Happy 4th of July. Do your mid-year resolutions. And remember what I said. If it's not your keys, it's not your coins.
He is the one.